In this video, I'm going to explain exactly what an investment banker does in the most simplest of terms, as well as explaining exactly the kind of clients we deal with and what it is that we do on a day-to-day basis. In the previous video, I spoke about an investment bank and the specific divisions which you can find at a typical investment bank. One of those divisions is investment banking. So, not everything which takes place at an investment bank is investment banking. It's only a specific division within an investment bank that deals with investment banking activities. What are those activities? Investment banking activities is pretty much split up into two main categories. The first main category of investment banking is known as mergers and acquisitions, or abbreviated as M&A. In this particular area, we advise our clients and help them execute financial transactions. What do I mean by that? We literally help clients buy and sell other companies. Now, there are 101 different reasons why a company would want to buy out other companies, maybe to buy out their competition, maybe buy out another part in the supply chain so that they can reduce their cost, maybe buy out another company in a different country so they can get access to that market. And you can also sell the business, either a part of the business to pay down debt or the business in itself in its entirety. You can think of this like a real estate agent, where in order to buy a company or help our client to buy a company or sell a company, we would first need to value that company and then go out and find potential buyers and investors. Just like a real estate agent, in order for a real estate agent to buy a house or sell a house on behalf of his or her client, they will need to first value the house and then go out and find buyers or sellers for that house. And we do this in a very similar way. In investment banking, we would value companies based on what other similar companies are currently being valued at. And in the real estate world, the value of your house is directly proportional to the value of your neighbor's houses. So if your neighbor to your left and to your right, if their house are both worth $500,000 each, and if your house is similar to theirs, then there's a good chance that your house is also worth $500,000. And that's exactly what we do in investment banking. In order to find the value of a company, we look at what similar companies are currently being valued at. But you do get the point. Investment bankers are really glorified real estate agents. Now, that's more specific to M&A investment bankers, so investment bankers that work in mergers and acquisition. Another major area in investment banking is capital markets. Now, in capital markets, we literally help our clients, businesses, governments, and certain individuals raise capital. And companies can want to raise capital for a number of reasons, whether they want to expand their operation, invest in R&D, research and development, whether they want to expand overseas, whether they want to pay down debt. For 101 different reasons, they want to raise capital. And they can raise capital through two different avenues. The first avenue, which a lot of people are familiar with, is by doing an IPO, which is an initial public offering. This is when the company is going to issue shares and sell those shares to the public. So right now, you can literally go out and buy Amazon shares or Apple shares, just like that. So Amazon and Apple, in exchange for selling their shares, they're getting capital, they're getting money. And that's exactly what we do for companies. We help them raise capital by selling shares. Another way we help them raise capital is by issuing debt. So we would sell bonds to institutional investors. Now, in order for investment bankers to do that, there's a long process, beginning with due diligence, marketing, and vetting. So in the first part, due diligence. Due diligence is really important for both aspects, for M&A and capital market, because you have to make sure that the company is operating, that the owners of the company are real, that there aren't any other claims on the company. Think of it from a real estate example. If someone randomly walks into a real estate agency and says, "Hey, I want to sell this house," how do you know that this house actually belongs to them? How do you know that this house isn't actually broken? Or how do you know that this house doesn't actually belong to their neighbor and that this person really hates their neighbor? So in order for that person to try to get their neighbor to move, he's just trying to sell his neighbor's house. So you really have to do a lot of due diligence. In investment banking, we liaise a lot with accountants, lawyers, auditors all the time in order to do the due diligence before we can actually begin with raising capital for this client or trying to sell this person's business. Now, there are other sub-departments within the investment banking floor, and this is leverage finance and restructuring. Now, depending on which investment bank you go to, the sizes of these little departments does vary. But if you go to the likes of Goldman Sachs or Morgan Stanley, then their leverage finance department is pretty big. Leverage finance is essentially a way for a company to raise capital, but it's not like a company that's raising capital. It's more of a private equity firm. So private equity firms, the way they operate is they do a lot of buyouts, leverage buyouts. They will go to an investment bank and say, hey, I want to buy X company, I want to buy Apple, but I'm only going to put down $100 and I want to borrow the $1 trillion via debt. And that's what the leverage finance department deals with. Now, that example is as an oversimplification example, but you get the idea. Another small area is restructuring. Now, restructuring is pretty much done when a company gets in trouble and can't really pay down its debt and needs help to restructure their debt, their balance sheet, and we help them with that. Now, sometimes they could be in such a dire need of help that the best option for them would be to just liaise with the M&A team, the mergers and acquisition team, in order to sell the business or sell a large portion of their asset in order to pay down some of their debt. So in summary, investment banking is pretty much split up into two main areas. You have mergers and acquisition, which pretty much buys and sells companies and part of companies on behalf of their client. The other major area of investment banking is capital markets. This is where we help our clients raise capital. The other two areas, relatively smaller, is leverage finance. So we help private equity firms raise capital. And then finally, we have restructuring. So now let's move on to what an investment banking analyst and associate does on a day-to-day basis. You can pretty much categorize their role into four main parts. The first part is financial analysis. Now, this is the process of valuing companies or certain assets. And the way that we would do this is first by getting numbers from specific sources. So we would get numbers from a company's annual reporting, quarterly reporting, equity research report, fairness opinions, and other official sources in order for us to get their historical numbers and then use rational assumptions in order to project those value out into the future so that we can get a good estimate, a good gauge as to what this company is going to be worth into the future. So if we need to go out and actually market this company to potential investors, we can say, hey, do you want to buy this company now? This is what it's going to be worth in XYZ years. The second main task is creating marketing materials. A typical investment banking analyst and associate can pretty much expect to spend half of their time preparing marketing materials or presentations. A large part of what we do as an analyst at an investment bank is creating pitch books. Now, pitch books is pretty much what we would do in order to try to win business. And in a typical pitch book, you'll find the investment banking credentials, situations. It literally outlines the specific opportunities which we see that could potentially interest them. And we would put all that in a presentation, and the managing director of the team is going to go and pitch it to their client. Now, that's one main type of presentation. Other presentation will include management updates. This is when we're going to update the management team, the senior management team, of the situation of their deal. We also spend a lot of time creating information memorandums. Now, this is a very large piece of document and it can take weeks, sometimes even months to make. And it can be anywhere from a few hundreds of slides. And I've seen information memorandum that's over 1,000 slides. An information memorandum is literally a large piece of document that highlights everything about a company. If you're trying to go and sell a company, you pretty much have to inform potential investors or buyers of that company, the products this company sell, its distribution chain, customers, the people who are in charge of the business, management team, the financials of the company. Everything that the potential investor needs to know about this business is going to be in this information memorandum. So you can imagine that we spend a lot of time to create this. Now, apart from information memorandums and pitch books, those are the two main types of presentation which occupies a lot of our time. There are other types of presentation and agreements that we work on, that we draft, but they're not as frequent as pitch books. Another activity that an investment banker does on a day-to-day basis is admin. Now, you might not know this, but a lot of what an analyst does in their first year, as well as an associate, is trying to schedule meetings, book meeting rooms for our clients. Think about it. If we're trying to sell a business, The ideal situation would be to get a bidding war. Just like if we're trying to sell a house, we want to have multiple interested buyers so that we can increase the price as much as possible. So we need to find a specific time where we can get the head of specific companies, the management teams, the CFOs, in rare cases, even the CEO, and trying to schedule a time slot between different companies where the people are really busy every single day is really difficult. Now, as an investment banking analyst and associate, one of your main assets is the skills that you have, is the knowledge that you have. And in order to keep the wheels turning at the investment bank, you need to hire more people to join the team or to join other teams. So we're used pretty often to recruit, to do interviews, to go out to universities, to do recruitment events, pretty much whatever networking event the investment bank needs us to do, whether it's to go off-site at a university or whether it's on-site to meet new incoming interns, analysts, and to train them, we would do that. And what's also important is at the end of the year, in our annual review, some of the stuff that we are reviewed on is how we contributed towards the firm. Did we participate in recruitment events? Did we participate in training new incoming analysts? Did we go to specific events where we had to network with potential new hires? So this is important for an analyst and an associate at an investment bank. Okay, so I hope that pretty much clarified what an investment banking analyst and associate does on a day-to-day basis. And if you have enjoyed this video, please subscribe and like, and of course leave me a comment if you want me to focus on any more specific areas or if you want me to elaborate on any specific areas. Now, if you do want to know what an investment banker does in terms of financial modeling, then of course check out our investment banking Excel financial modeling course, where we literally take you from basic beginner to someone that is investment banking ready. We go through basic accounting, essential accounting, everything that you need to know from Excel, as well as financial modeling, step-by-step process. And we also go through a pitch book, which is extremely important because half of what you'll be doing is creating pitch book. And as well, don't forget to check out our guide on how to break into investment banking and investment banking interview questions and answers so that you can easily ace your interviews once you get them.